No one knows which direction the market will go on a day-to-day basis. However, there are ways that you can use to make an educated guess on this. This video is a weekly update, a financial weather forecast if you will, to get a glimpse into what the seasonal history would suggest is normal behavior. If you're new to my content, I'm Privacy Smurf, the mind behind Zenalytics trading. I focus on creating, practicing, and teaching systematic trading approaches. I strive to break down complex topics into simpler, objective concepts and building blocks. You can use these blocks to construct less biased and comprehensive trading strategies. If you've never heard the term seasonality before, think of it this way. Essentially, time and price series data is cut into yearly segments and they're stacked all on top of each other. In my particular process, the data is normalized to account for changes in the markets over time. This way we can compare data from far into the past the same way as we would the data from last year. Once all the years are stacked on top of each other and combined, we get a picture of what typically happens at any point in time over a standard year. It's not a guarantee, so using technical analysis for confirmations is really critical. Last week was a down week and played out according to the historical probabilities. We're about to enter the 31st trading week of the year. Let's see what the probabilities suggest. This chart is using the TradingView ticker symbol SPX. It's looking at the S&P history of about 154 years. The blue line, which represents the historical seasonal trend, is up going into next week. There's also a green background behind it. These two elements show that in the past, more weeks were bullish than bearish, and the overall net percent gain was positive. Now let's compare the SPX against the E-mini S&P futures contract, or the ticker symbol ES. The ES data has significantly less history, only about 28 years, because the futures contracts just haven't been around for that long. While the ES is a smaller data set than the SPX, I still like to include it because I feel it represents the more recent trends in the S&P. The blue line showing the historical seasonal trend this week on the ES is down, while it has a dark green background. The data shows that on the ES futures contract, this week has closed bullish more than bearish the vast majority of the time, yet the overall net outcome was negative. That means the few bearish weeks that there were very, very negative and outweighed all the gains of the bullish weeks. Putting this all together, I'd expect a neutral to a bullish week. With that in mind, there are two possible executions I'd be looking for on an intraday chart. I'd be focusing primarily on the 15-minute time frame. Last week, prices traded essentially in a range from 54.30 to 55.35. With the odds of bullish seasonality in my favor, I'd be looking for trade signals that align with that. Either a bullish reversal signal as prices start to dip below 54.60, or a breakout from the 55.35 level. Remember, trading is risky and stats aren't perfect. The past doesn't always translate into the future. Be sure that you have some invalidation idea and a stop loss in place to protect yourself from risk. If you're interested, tomorrow I'll be releasing the video on the crypto seasonality. Otherwise, I'll see you next week.